Hello, Chasers! Welcome back to another episode of the Chasers Channel, the podcast where we dive deep into the world of business and finance and provide you with expert advice to help you make informed decisions that will bring you closer to achieving the dreams you are chasing. For those listeners who are new to the world of buying property, this episode is for you. In today's episode, we will be covering 10 steps you will typically go through when purchasing your first home, along with some information on government grants that may be available to you. I'm Chris Becks, your host, a business and financial advisor with over 40 years experience and the founder of the multi-award-winning CBEX Business Solutions for Good. And as this is a lending topic, as a credit representative of Outsource Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation, or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. Chris Becks is a director of CBEX Financial Solutions and a credit representative of Outsource Financial Limited, license number 384324, and is authorized to provide personal credit advice.
Alrighty, now that is done, let's dive into this episode. Buying your first home is a significant milestone, and it's essential to approach it with careful planning and consideration. Understanding the steps you should consider during this process will help you have a clear understanding of your ability to borrow the required funds, buy your first home, and repay the home loan. Let's look at these typical steps now. Number 1, assess your finances. Determine how much you can afford to spend on a home. Consider your income, savings, expenses, and existing debts. It's crucial to have a clear understanding of your financial situation before you start house hunting. We recommend you do a budget to see what surplus money you have available. Also, check your superannuation policy to see if you have income protection cover. If not, engage a financial planner to discover why this type of cover is recommended to protect your income if you are considering taking out a home loan, because in the event that you are unable to work due to injury or illness, you need to have a backup plan. Number 2, create an emergency fund of $2,000 and a cash reserve of 3 to 6 months worth of living expenses. This will act as a buffer in the event of an emergency or loss of income. Number 3, save for a deposit. Start saving for a deposit, which is typically a percentage of the home's purchase price. The higher your down payment, the lower your monthly mortgage payments are likely to be. Many lenders require a down payment of around 20% of the home's purchase price, but there are options available for smaller down payments, such as using government grants, which we will outline later. Number 4, get your loan pre-approved. Before you start house hunting, get pre-approved for a mortgage from a lender. This will give you a clear idea of how much you can borrow and help you narrow down your home search to properties within your budget. Number 5, start house hunting. Once you have your pre-approval letter, you can begin searching for your dream home. Consider factors such as location, size, amenities, and price when evaluating properties. Number 6, make the offer. When you find a home you like, work with your real estate agent to make an offer. If you are buying at a private sale, you should make your offer to purchase subject to finance and building and pest inspections. This way, if your offer gets accepted, you can then arrange the inspections. If you are buying at auction, you will need to get your finance and building and pest inspections done prior to the auction. Number 7, get a home inspection. After your offer is accepted, schedule a home inspection to identify any potential issues with the property. This will help you make an informed decision about whether to proceed with the purchase. Number 8, negotiate your loan. Even though you have approval from one bank, there is nothing stopping you from shopping around to get a better rate. Number 9, settlement. You will need to find a solicitor or a conveyancer to handle the paperwork for your settlement. Number 10, pay off your loan as quickly as possible. One strategy is to pay fortnightly instead of monthly to save interest and reduce your home loan term. In Victoria, there are several government grants and assistance programs available to help first-time home buyers enter the property market. These grants and schemes are designed to make home ownership more accessible and affordable. Here are some of the main programs. The First Home Owner Grant, or FOG, is a national scheme available in Victoria and other states and territories in Australia. Eligible first home buyers in Victoria who are purchasing or building a new home may be entitled to a one-off grant of $10,000. The grant amount and eligibility criteria can vary depending on factors such as the value of the property and whether it's located in a metropolitan or regional area. The second one is a first home buyer duty exemption or concession. First-time home buyers in Victoria may be eligible for a stamp duty exemption or concession when purchasing a new home or established home. The amount of the duty payable and eligibility criteria depend on factors such as the value of the property and whether it's being purchased and used as a primary residence. If you purchase for $600,000 or less, you receive the first home buyer duty exemption. If you purchase between $601,000 and $750,000, you receive the first home buyer duty concession. The third one is the First Home Loan Deposit Scheme, and it's a federal government initiative that helps eligible first home buyers purchase a property with a deposit of as little as 5% without needing to pay for lender's mortgage insurance, or LMI. This scheme assists buyers in avoiding the additional costs of LMI, which is typically required for loans with deposits of less than 20%, and you can apply for this with your lender. The fourth grant is the Shared Equity Scheme. The Victorian Government offers a shared equity scheme to help eligible first-time buyers purchase a home. Under this scheme, the government contributes to the purchase price of the property, reducing the amount of money the buyer needs to borrow. In return, the government retains a share of the equity in the property. These programs and grants aim to support first-time home buyers in Victoria in various ways, whether through financial assistance, stamp duty concessions, or access to affordable home loans. It's essential for prospective buyers to do the research and understand the eligibility criteria, the application process, and deadlines for these grants and schemes, as they can change over time and may have specific requirements. Pre-planning for the purchase of your first home does require some effort, but understanding the process and steps typically undertaken by successful first home buyers can be valuable and get you into your first home sooner. The 10 steps provided are a guide to provide a clear understanding of what you should consider to put yourself in a stronger position when it comes to buying your first home. If you would like to simplify your first home buying process, reach out to our mortgage broker at CBEX Financial Solutions on 0355 612 643. Thank you for listening. I'm Chris Bex, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.